Okay, everybody, it is me. It's still me, and it will remain that way. At least I hope so. Anyway, people, look, we have to talk. I want you to get comfortable and want you to relax. We had a freakish day today, and I'm not just talking about the volatility in the stock market. We're going to cover that here, but we heard from the IMF today. We heard from the Fed today. We heard from a billionaire hedge fund manager today with some interesting news, all kinds of stuff. And we are going to cover it right here and right now. And I sincerely hope I don't have a meltdown. That's really the truth here. So let's start off with, well, the basics, which is the market. It helps me get my bearings straight. As I said earlier, a very volatile day. Stocks were higher. Stocks were markedly lower. We finished relatively flat. I mean, the major indices did fall into some pressure, but nothing major. I mean, well off of the lows and well off of the highs today. The market was all over the place, trying to make sense of not just the moronic variant that's going around and the hysteria. In my view, people, look, they're trying to create hysteria. That's what they always do. It's a highly mutated variant. Scientists have never seen this one before. It's out of control. And that's what they're doing. They are trying to make you afraid. They can make you afraid of this thing. See, I get this little chapstick thing here. If they can make you afraid of this little thing of chapstick or this pen or of this little model car I have here. Thank you, Paul. I don't care what it is. If they can make you afraid of that one thing, you're done. They will control your mind. It just sets a cascade of events in motion, which allows them to penetrate into your primal fears and your primal instincts, and you're done. So that's what they do. The constant, pushing of fear on you, creating hysteria. That's what they're going to do here. And it causes a lot of people to act in a very interesting way. They kind of fall onto their knees, and that's exactly what they do, and submit to whatever is told that they should do because they've been made afraid of this little model car. Yeah, it's an amazing phenomenon, but it's really the truth here. Anyway, so with the market volatility today, something else is going on, and I want to bring it to your attention yet again. It's the yield curve, people. It's the yield curve, or what is the yield curve telling us? It's reflective of the debt market as a whole, and we have to understand the debt market is the driver behind everything that's going on. The stock market is a derivative of the debt market. You know that if you've been following this work, my work. You know that if you understand anything whatsoever. This is why the Fed, central banks are taking the largest aspect of the market, which is the debt market, and manipulating it any which way they want to do. And that, of course, has an effect of, again, moving equities higher, creating a stock market hyper bubble, reinflating a housing bubble, real estate bubble, and distortions across the spectrum of asset classes. That's what it's designed to do. You see, I think that's the big missing link here. What you will never, ever hear, ever, from a mainstream news outlet, a financial channel, is why it is that the debt market is what's always attacked by central banks, because their job is, again, to issue debt and manipulate debt. That's all they can do. Being that the debt market is, well, all debt, that's how the Fed gets into the market and allows things to happen and allows things to manifest themselves. Let me ask you, if most of you have been with me for a long period of time, some of you are brand new, welcome aboard. But if you had to just think for a moment, if you are in an environment where rates have been artificially suppressed now since the meltdown of 2008, and investors are simply looking for a place to put their cash to work, well, they can't do it in the debt market, because if you put even a single dollar to work in the debt market, well, you're guaranteed to watch that dollar or whatever sum you may invest in it just evaporate in terms of purchasing power and in terms of return. I mean, if you were the 10-year yield today, the 10-year yield is 1.36. The whole entire yield curve came down, like I explained to you. So you want to invest in a 10-year treasury note here and earn a negative return. So what this does, understand, is, well, it causes malinvestment. It causes cash to move into risk assets, inflating a bubble in the stock market. You see, you're not allowed to know this stuff. This is like, really basic, but you're not allowed to know what's going on here. Suppressed rates also cause housing prices to move into the stratosphere. Duh. That's what we're seeing now too. It's an astonishing thing here, what we're witnessing, but it's not going to stop. And I want to talk more about that too moving forward. But going back to what I was saying. So yeah, stock market fell under some pressure today. Big freaking deal. Really not much at all. But the entire yield curve continues to drop. Now, again, I urge you, open up a new window while you're listening to me talk. And just, go onto one of your search engines and say, what does a flattening yield curve mean? And you will see, it's very simple. If you don't want to do that, it's a tell that the economy is not as strong as we are being led to believe. We're in economic collapse. We are in an economic collapse. And as a matter of fact, that's something the IMF warned of today, an economic collapse. And I'll talk more about that in just a moment. But when you see action like this in the debt market with that yield curve flattening out, is a clear sign that the economy is in dire shape. We have been in dire shape for a very, very long period of time. You're not allowed to know that. You have been told by politicians, rah, 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 tremendous, fantastic, the best we've ever seen is all a lie. All that is going on here is a vast expansion of debt on an unprecedented scale. And that creates an illusion that things are okay. And again, the nature of the economic monster is very, very simple. That debt must be borrowed into existence in greater and greater amounts just to sustain this illusion. Once we stop borrowing, well, we turn into Mad Max. We completely implode. And that I will talk more about that in a moment when I go over my notes here, which I was jotting things down all day long with regard to what the IMF said. Anyway, so understanding that at its core, we have a central bank that's buying it all, that is determined to fulfill their end game. You know this. I say it every freaking day because I want you to remember it every freaking day, okay? That the Fed is on a mission to be the lender and buyer of last resort. They're working towards an end game, a goal, and a final solution. That is to be the ruling body of the entire world. They already are there. You have no representation. I don't care what you may think. I don't care if you worship President Bidenstein or if you worship the other guy, Trump, with his funky hairdo. Anyway, I kind of like this hairdo. I'm going to be honest with you. I know a lot of people made fun of President Trump's hairdo. I liked it. If I were in his shoes, I would wear my hair like that too. I really would. But that's just me. But it doesn't matter who sits behind the Resolute desk. It's an illusion. It's part of the distraction mechanism. It's part of the charade that is played on people to convince them, or at least try to, that they have some voice. You have no voice at all whatsoever anymore in this new paradigm. This new set of rules that I told you was coming from a very, very long time ago. And understanding the mechanism behind this, that central banks are going to continue to inflate until they're just not going to stop. And understanding that rates will continue to be suppressed. The Fed is determined to buy assets will cause these distortions which exist in the market to get greater. I have shown you this mechanism. I said the debt would continue to inflate. And as the economy continues to crater, the stock market would go higher on the back of this here. So that's what's going on here. Are we going to reach a breaking point? Yes. When is that breaking point coming? I have no idea. I don't even think about it. I look at things like the MMRI, which actually crossed over 90 again. I don't like it here. I'm not calling for a market crash or anything major to go on, although we do have to keep our eyes open, like I always tell you. Pay attention to what's going on. Raise your awareness. Watch that yield curve dropping like this. The dollar is a big part of this as well. And it sums up really nicely in an equation. If you take debt market action, you take the relative strength of the dollar, you put this into a little equation, and you get, bam, the MMRI. Again, link in the description of this video, which tells you where market risk is going. And the Fed is not going to stop. So what that means is you're going to continue to see massive, massive price distortions. There is no single asset today, not one, I don't care what you might think, that has a real price discovery mechanism behind it whatsoever. It's zero, nothing. Even cryptocurrencies, nothing has a real price discovery mechanism behind it. I just think things like cryptos, like gold and silver, are massively undervalued based on exploding global debt, which is about to get much, much worse. And you know what? Let's move on to that before this video gets stupidly long. So we heard from the IMF today, and this kind of rattled the markets a little bit. Again, the market was off to a nice start. We were green across the board. It was looking beautiful. Then the IMF comes out with this. This is a quote from the IMF. They are warning of an economic collapse. Are you ready? Sit down. If and unless debt vastly expands. I'm not making that up. What the IMF is saying is unless failing nations are given loans, if failing nations are not allowed to take on more debt or get issued more debt or have available to them the ability to get in more debt, we are going to have an economic collapse. That should tell you the nature of the beast. Without the continual, relentless borrowing of cash into existence, yes, that's the only thing that's keeping this illusion alive, is the relentless pulling from the future of cash, borrowing and borrowing and borrowing some more. So the IMF is being absolutely truthful here by saying, IMF warning of economic collapse unless global debt vastly expands. You can't make that up. Try to make it up if you try to. It's out of control here, people. And then at the same time, we heard from the IMF regarding the United States. This is the game that they play. IMF says the Fed, I'm reading this, must tighten monetary policy faster. Really? Not going to happen. The Fed is, again, working towards their goal of inflating, and we haven't seen anything yet. It's completely out of control. Now, with regard to the Federal Reserve, so we understand what happened this morning. We got this historic miss with regard to November payrolls. But the Federal Reserve is shrugging it off. Oh, don't worry. It doesn't matter at all, I guess, unless you're one of these people who are, again, suffering. And if you're a member of the middle class, you're all suffering. You really are. A lot of you are continuing to borrow just to make ends meet. Again, household debt, credit card debt, personal debt is surging. People are applying for credit cards at a historic pace, while the well-off and the rich could not possibly be doing better, with luxury sales taking off, big homes, cars. Oh yeah, that's just fantastic. It's all part of what I explained to you was going to happen a long time ago, the two-tier society, extreme haves, extreme have-nots, a wipe out of the middle class. It's that simple. Anyway, gosh, I have so much to talk about. Let's do this. So most of you know who Ray Dalio is. Ray Dalio is a billionaire hedge fund manager who has an interesting twist on a lot of things. As a matter of fact, if you were to listen to Ray Dalio, he is really in line with a lot of things I say and you believe as well. Now, this guy, billionaire hedge fund manager Ray Dalio, this is amazing. Listen to what he said here. He is predicting that there is, as of right now, a 30% chance of a United States civil war. This is what he goes on to say. Two major reasons why Ray Dalio believes that the United States is headed towards civil war. Number one, governance is being ignored. People have no representation. Does that sound like Greg Mannarino to you? It should, because I've been telling you that for the longest time. Number two, U.S. constitutional liberties and freedoms are being abandoned. Yeah, that's exactly what's happening here. And this is not just a phenomenon here in the United States. He's talking about the United States falling into a civil war, 30% chance. But this is a global phenomenon. You think this is by accident, people? Do you really, really think that what you're seeing, everything what you're seeing is by accident, including the scamdemic? You think this is by accident still? If you do, please unsubscribe. Because you're lost beyond the point of being lost. It's really the truth. I've explained to all of you for a very, very long time that the Fed is working towards an end game. The Fed is working towards a goal. That is, again, I'm going to say it for the millionth time, to be the lender and buyer of last resort, to own it all. They're going to keep on their present pathway for the foreseeable future. And this has caused, again, inflation to surge at its highest and fastest pace in history here in the United States. What is the Fed doing right now as I am doing this video blog? They are buying assets. They are not stopping buying assets. How do they do it? They create cash out of thin air. They add it to a digital screen and they buy assets. Every dollar the Fed adds to a digital screen, you know what? Let me put this into perspective for you. When a dollar is created, when the Federal Reserve makes a dollar, when it decides to magically create a dollar, where does it get its value from? Do you ever think about that? I'm going to tell you, it doesn't just automatically become a dollar and worth a dollar. When the Federal Reserve creates a dollar, that newly created dollar, has to steal value from every single other existing dollar on the planet Earth. A fraction of a fraction of a fraction of value must be sucked out of every existing dollar, whether it's a digital one or it's a printed one. That's how that newly created dollar gets purchasing power. So every dollar that the Fed magically creates out of thin air, whatever they want to do with it, they want to buy assets with it, they want to do whatever they want. Don't matter. You know the Fed can do whatever they want. Devalues the value, the purchasing power, or debases the currency. And they're being allowed to do this on an epic scale. They've been called on to do this from the last 3 presidents, including the current one, at a blinding pace. Blinding pace. Our last president was calling for negative rates, Trump. Our last president was calling for a weaker dollar as well. It's an astounding thing. Our last president, rightly so, said the stock market was a big, fat, ugly bubble prior to his presidency. But during his presidency, look at that stock market. They're all puppets. They don't work for you. They are good actors, and they may convince you that they have your best interest in mind, but they do not. Okay, all of them. I don't care how much you worship them. I want to lick their feet or whatever it might be. It's just the way it is, people. Get used to it. We also got a warning today from Federal Reserve President Bullard. This very nice man. I was going to say something terrible. He's warning of inflation shock. I would be willing to bet you're already in a mode of inflation shock. I was shocked the other day. I told all of you. I went shopping the other day. Albertsons, right over here, about 10 minutes from my house. I'm noticing everything is shrinking and shrinking and shrinking and shrinking and shrinking. It's getting smaller and smaller. And they're charging more and more for it. It's unbelievable. You know, this shrinkflation, no, it's not in your imagination. It's actually happening, okay? But I can tell you this, people. Expect everything you are seeing to get monumentally worse. Because that's the plan. Is to bring the global economy to its knees. Slowly but surely. And so I tell you, prepare yourself. Get ready for what's coming mentally and spiritually. People, I could keep going, but I want to end this video before it hits 20 minutes. I love all of you a lot. I'm going to leave you off with my favorite 3 things. Bring it in. Nobody's looking. Okay? Love each other. Care about each other. Be charitable. I believe you're going to see the Crypto Kid tomorrow. You're going to see me on Sunday for my markets to look ahead. I am looking so forward to seeing all of you. And I mean that from my heart. Ponder what I've said in this video. I want to hear from you. Please comment on what I laid out in this video. I promise to read the comments. I may not write back to all of them. In fact, I probably won't, but I will read them. I want to hear from you. All right? I'm out of here. See you Sunday.